Ever wonder how to read stock charts? This shows the fight between buyers and sellers. Breakouts only matter when the volume surges.
Ever wonder how to read the Ichimoku Cloud? When price is above the cloud, that's your uptrend. Clear skies. This cloud shows the next move before it happens.
You ever wonder what the #1 stock secret is? Don't chase perfect moments. Let time do the work. Miss the best days, and you miss the wealth.
Ever wonder what a candlestick really means? It shows the battle between buyers and sellers. Candlesticks tell the story of price.
Green means buyers push price up, and red means sellers push price down. That's the story of bull and bear candles.
I want to drop this thing. I was working across Doji the price. Doji means buyers and sellers are equal. Patterns show how the market feels.
And resistance. Price reacts to these levels. Resistance is where sellers push down. Support is where buyers push up. These levels guide the market.
This is a trend line. It shows the path price respects over time. Uptrend means higher lows, and downtrend means lower highs. Trend lines reveal direction.
This is volume. It shows how many shares were traded, and strong volume means strong interest. Volume reveals the strength behind every move.
Price squeezes, waiting to escape. A breakout happens when buyers break through resistance. Momentum takes over. Breakouts show strength.
It moves because people do. Greed pushes price up. Fear pulls it down. Behind every candle is a human decision. Learn the emotions, and you learn the market.
This is RSI. Above 70 may be overbought. Below 30 may be oversold. RSI shows momentum behind emotion.
This is MACD, Moving Average Convergence Divergence. It compares fast momentum and slow momentum, so you can see when momentum shifts direction. MACD reveals changes in trends.
Once upon a time, there was a little red candle. He was walking down a hill because he kept slipping and sliding. He was tired, sad, and brittle.
Right here is a bullish engulfing pattern. Picture a market sliding down, sellers in control. Then a single candle wipes out the prior red body and closes higher. Big green swallowing little red.
Before you charge into the market, remember 3 things. Set a goal and a timeline. Start with broad, low-cost funds. Let them work while you sleep. And never put in cash you can't.
Becomes valid only when the green body fully engulfs the prior red body, excluding wicks. Criteria for validity. 1. Prior downtrend. 2. Green body.
Once upon a time, there was a little red candle. He was walking down a hill because he kept slipping and sliding. He was tired, sad, and brittle.
Once upon a time, this little red candle kept slipping down the hill. That's the downtrend. He kept falling no matter how hard he tried. But then a strong
step lower showed sellers were still in control. He opened lower, but pushed upward with confidence. That is the engulfing. Body over body, CFA correct. The shift in control is clear. And that is the...
is a textbook hammer pattern. A hammer forms when sellers drive price down, but buyers reclaim control before the close. Criteria for validity. Prior downtrend. Lower wick at least 2 times body.
There was a little green candle climbing up a hill. Buyers were in control. He opened higher but moved downward with conviction. That is the bearish engulfing. Red body overtakes green body. A shift from buyers to sellers. And that is the meaning.
The story begins with price rising. It opens higher but pushes downward. This is the bearish engulfing. This signals a possible trend reversal. That's the correct interpretation.
The setup. Price is climbing, buyers in control. Then we get this small green candle. Nothing special. Next bar. A red one twice its size swallows it whole. That's a bearish engulfing pattern. It tells you momentum.
Right here is a bullish engulfing pattern. Picture a market sliding down, sellers in control. Then a single candle wipes out the prior red body and closes higher. Big green swallowing little red.
All right, little traders, gather close. Tonight's story comes from the market forest. A tiny green candle woke at dawn, shining bright and hopeful. But from the shadows lumbered a big red bear. He wrapped around the little
me for getting in and out of trouble fast. Turns out, markets move the same way. This is a candlestick chart. Every bar is a story about price, where it opened, where it ran, and where it fell asleep. Here...
All right, little wolves. Holster your questions and listen close. Tonight's tale isn't about bounty or escape. It's about a candle and two bands that guard it.
Like a fairy tale?
A trader's ferry.
You charge into the market. Remember three things. Set a goal and a timeline. Start with broad, low-cost funds. Let them work while you sleep. And never put in cash you can't.
Reversion on large cap stocks, short term. Highest consistent win rate I've ever recorded. Here's the setup. RSI-2 drops into oversold. Price closes outside the lower Bollinger Band. Stock
Here are the 96 months. A company needs capital, so it hires an underwriter. The underwriter buys the issue from the company and places it with investors. Fresh, never before